Hey, it's Mike Watson, and here's your Antelope Valley real estate market update for November 2023. In November, we had 359 new homes come on the market. That was down almost 11.5% compared to October, but was up almost 4.5% compared to November of 2022. We had 261 homes go into escrow, which was down almost 5.5% compared to October, but it was up 7% compared to last November. So we had more homes go into escrow compared to last year than we had new homes come on the market, and that's just pushing our inventory levels down. That's good for home sellers. It will help values remain the same. But the fact that we had more homes come on the market is great for buyers because they have more to choose from. In November, we had 256 homes close. That was down almost 4.5% compared to October, which is pretty normal with seasonality. But we were down 6% compared to last November, and I'm sure that's because interest rates were significantly higher this year than they were last year. The average selling price for November was $469,000. That's down 5.32% compared to October, which October was one of our highest selling prices ever. It was in the top 5 for sure. And so this 469 was down just over 0.5% compared to last year, which is really interesting considering how much higher interest rates were. And that takes us to this point, which is the average monthly payment for November was $3,854. That was down a little over 5.5% compared to last month, which the selling price was down roughly the same, about 5.5% month over month. But the increase for last year was almost 7%. So the monthly payment was up almost 7%, while the average selling price was down just over 0.5%. So that shows you the power of the interest rates and how they're having an impact on affordability. The average days on market for November was just over 36 days. That's down compared to October by almost 12%. And it's down year over year, almost 13.5%. So seasonality doesn't really play a part here when we look year over year. So there's more homes on the market and they're selling 13.5% faster than they did last year. 36 days on market is a very healthy market. It's a seller's market for sure. If we were at 120 days or more, that would be considered a buyer's market. So things are still selling pretty quickly, assuming that they're priced correctly. And there's fewer homes on the market, so there's fewer going into escrow and fewer closing, but it's all at a good relative rate. So things are still moving along pretty healthy and inventory is not building too much. Speaking of inventory, we are at 2.44 months worth of inventory. That's up a little over 5.5% compared to last month. 5.5% of 2.4 is a low number. And the same thing goes with the decrease compared to last year. It's down almost 14% compared to last year. But again, 14% of 2.4 is a small number. And as a reminder, what this is if we did not put another home on the market and we continued to sell at our average rate, in just under 2.5 months, we would have no more homes for sale. 6 months is a balanced market where it doesn't favor a buyer and it doesn't favor a seller. Anything under 6 months tends to favor sellers, and anything more than 6 months tends to favor buyers. So here we are at 2.5. The market is doing very well, even though we are in the fourth quarter and things are slowing down a bit. And like I said, fewer homes have come on the market and fewer homes have sold because of it, but they're pretty lock in step throughout the year. So the market has done very well. It's surprisingly well. So anyway, if you have any questions, if you want to know how this all impacts you, or if you're thinking about making a move, I would love to have a conversation with you. I will talk to you soon.